Will February be a month to remember or a month to forget for stock investors? Welcome to Trading Nation. I'm Brian Sullivan. Jonathan Krinsky of MKM Partners, Eddie Elfenbein of the Crossing Wall Street blog are your guests. And Jonathan, you've got a pretty interesting view. You believe that February may, well, in technical terms, stink for stocks, but it could be a longer-term buying opportunity. Defend and explain, please.
Well, first of all, we've gone 74 trading days without a 1% daily decline on the S&P. It's the longest streak in 11 years. So we're due for at least a 1% down day, which we may actually be getting today. Once you finally have that, you tend to see weaker than average returns over the next couple weeks. And as we sit here and are maybe having a 1% down day, we're entering the month of February. Now, historically, February is the weakest month of the seasonally strong period that is from November through April. But then if you take it a step further and look at post-election years, February is even weaker. Actually averages about a 1.8% decline for the month of February in years following the election since 1977. So that's the backdrop from a seasonal perspective. Again, we don't think it's anything serious. We'd actually view it as a welcoming buy opportunity. But when you add that all up and you look at, again, we've come a long way. We have a lot of stocks that have had massive moves. So it's really just a consolidation through price, and that could be in the 3 to 5, even 6% range, and that would still put the S&P above
right?
its rising 200.
It would be healthy.
It's healthy until it's not. So that our call is that's probably what is likely to unfold, and then we'll have to evaluate the market internals from there. But right now, we think the risk in the short term is to the downside.
Eddie, do you agree? You think we're going to see a February swoon?
I exactly agree with Jonathan. Same thing, just the incredibly placid market we've seen since October. No 1% drops. I had a few other things. One is I think the analyst estimates for the rest of the year are very good, perhaps too high. I think that needs to come down a little. Also, we've just seen the weakness in the bond market over the last 6 months, and that usually is a leading indicator for the stock market for about 6 months. Again, I don't want to overstate this. It's a February, March story, and I would say 5 to 7%. But once that's out of the way, I think it looks very good for stocks.
Okay. Eddie Elfenbein and Jonathan Krinsky, we are watching February closely, guys. Thank you very much for your views. Folks, be sure to check out the live version of Trading Nation, generally in the 1 to 3 p.m. hours on CNBC. I'll see you there as well, and we'll see you here next time.